and nobody cares. I mean, part of the reason I guess that nobody cares is they assume that it doesn't matter, right? Because all these numbers are Biden's numbers, and as soon as Trump gets in there, it's all going to turn around. But it seems that most of the people in the financial media, and certainly the mainstream media, are still claiming that everything is great, that Biden is handing Trump a pristine economy. Remarkable was the word that Jerome Powell used to describe this economy, right? It's remarkable. And I think, again, they're setting Trump up because when the economy turns south, or it's actually already south, they just pretend it's north. But when they're forced to admit the economy is in recession, they're going to claim that Trump broke it, that everything was great. And look how quickly Trump ruined an awesome economy. It was remarkable, and he managed to wreck it in a matter of months. That's how bad Trump is. That's how damaging his policies are, that they created a recession before they were even, enacted, right? So that's what's coming. But they're still ignoring all of this data. I think that if we were getting this weak economic data without Trump, right, had Harris won, the dollar would be considerably lower right now. It would be lower than it was when we had the election, because the markets would have factored in this weak data, and they would have assumed that it was going to continue because, Harris would have been a continuation of Biden. So there would be no hope for change, right? Even though the hope we have now is mainly false hope, at least there's hope. But I think gold would be a lot higher. I mean, gold may even be over 3,000 by now if Harris had been elected, instead of 2,600 where it's been hanging out recent this week. But anyway, so the news that we got, Richmond Fed manufacturing, that came out for December, -10. Again, a negative number. Not as bad as the November month number that was -14, but worse than the -8 that was expected. But again, manufacturing continues to weaken. These are the jobs that, Trump claims that he wants to protect. It's the industry that he wants to revitalize. Well, it's collapsing right now. And Biden had been taking credit for this manufacturing renaissance. In fact, every president talks about the manufacturing renaissance. We've been in the dark ages for manufacturing for the last several presidents. Even consumer confidence took a nosedive in December. I don't know where this came from, right? Because everybody had been excited about the election. So the prior month was actually revised up from 111.7 to 112.8. They were looking for 113 for December. Instead, it crashed all the way down to 104.7. That was way below the low end of the consensus. They were looking for anything between 110 and 115. So the election high is already wearing off, and Trump isn't even elected yet. Remember, I was saying that I think Trump could have one of the shortest honeymoons on record, because the honeymoon could be over before he makes it to the altar, right? That the honeymoon is going to end before he takes the oath of office, right? Because so much has been built in. All this, the positive expectations, the rally in the stock market, the rally in the dollar, all this happened before he's done anything. And then when he finally gets to office, the markets are going to be very disappointed, I think, in what actually gets done. The next number I'm going to look at is Chicago Fed national activity. Another negative print, not as bad as the prior month, which was revised to worse. It was -0.4, and they revised it to -0.5. I'm not sure what they were expecting for November, but we got -0.12. But the 3-month moving average went up from an upwardly revised 0.27 to a -0.31. So again, another national index, Chicago Fed national activity, in recession territory, right? Again, markets had no reaction. probably the weakest number that I would have expected some reaction to. The bond market didn't even care. Durable goods orders for November. A lot of times this moves the markets, right? They were looking for minus 0.2. We got minus 1.1. That's a big drop, especially from an upwardly revised up 0.8 in November. And ex transportation, we were down 0.1. We were supposed to be up 0.3. And so that was a weak number. And the core capital goods number, that one was actually better than expected. But the headline and the ex transportation numbers were much weaker. Again, but the bond market didn't care. Just shrugged it off. So we're getting more confirmation of what I already knew, which was that the economy was weak. Now, despite a lot of this weak economic data, oil prices were firm on the week. And in fact, oil closed the week above $70 a barrel. We're at $70.26. Now, that's still low. But if you look at the chart of oil, it looks to me like we're putting in a pretty good bottom in the oil market, just like we're putting in a top in the bond market. And I'm not talking about a short term. I'm talking about a major, significant bottom in oil and top in gold. I mean, and top in bonds, not top in gold. And this is not a coincidence that these markets are behaving the way they are, because the bond market and the oil market are very much a function of inflation. Inflation is bad for bonds and good for oil, right? Inflation drives oil prices higher and it pushes bond prices lower, driving bond yields higher. And that is exactly what's happening. And I know a lot of people are basing their optimism for the Trump economy on much lower oil prices, because they think that, well, we're going to have all this new production and that's going to result in much lower oil prices. Well, if we have much lower oil prices, we're not going to have a lot of new production. See, that's the problem. You can't afford to produce oil if the price goes way down. People are saying, oh, we're going to have $40 oil. We're going to have all this new production. If oil's at $40, no one's producing oil. They're going to lose too much money.